Agribusiness is hitting the IPO market this week. First up is Sprout Farmers Market. It is a healthy food store, and their claim to fame is they have very friendly stores. The aisles are not so crazy like a mouse maze, and they're lower. Also, they say they're a lot cheaper than the alternatives. I'm joined with Francis Gaskin. So, Francis, you like this company, but I'm worried the margins are going to be way too low. And while these stores look really nice, they're really small.
Right. Well, I like them only on a comparative basis relative to Whole Foods and natural grocers. And if you look at that, they're coming at a price to sales discount and a price to earnings discount to them. It's an Apollo deal. Apollo deal is always a little questionable. This one will probably work out. It markets itself as Sprout stores, but it's really a roll-up of acquisitions. 80 of the stores were acquired recently, and they're not Sprout stores. They're trying to rebrand it, but the branding in these kind of stores are just pretty much local. And so I think the stock, it'll do okay, but I think the other competition they didn't mention in the filing is Target. Target has some of the low-cost grocery store health food type places. So you're right, the competition is increasing there. And this is pretty much a regional company. It's in Colorado, California, New Mexico, Arizona, and a few stores in Texas. So their challenge is to take their footprint out and brand it together. But it's an Apollo roll-up deal, which is always questionable. But based on the metrics, it'll do okay.
All right. Well, like I said, it may be a nice store to go to, but I don't know if it's a stock I want to own. Then we have Marrone Bio Innovators, and this company has pesticides. They're going after the market that's a chemicals market, but they're bio-based, so they're friendly pesticides, but they're not making any money, so it doesn't sound too friendly to investors.
Right. They provide microorganisms, and it's EPA approved, and so on the surface that sounds very green and very good. They lost $11 million in their March quarter, and they had an increase in sales for their June quarter with the recent developments, but the gross margins plummeted to 15%. So the gross margins are bouncing all around. They're losing money. I would stay away from that one.
All right, stay away from Marrone, and when you're looking at Sprouts, just be advised that maybe it's not the best choice, but it does look like it's a cheaper alternative to the others.